Hi there and thanks for joining me. My name is Andy Rowe and this is trendfollower.co.uk. This video is one of a series where I'm describing how I'm attempting to go about building my own hedge fund essentially. I've talked in the past about buying shares, investing in companies and creating wealth that way. I've talked about investing in property. Last time I talked about buying commodities, and in this video I'm going to talk about buying gold. Now gold is the ultimate store of value over the centuries, going back to Tutankhamun's days. I mean, there was gold all over the place. In South America, the Incas, the Aztecs, gold everywhere, and of course the Spanish explorers, were delighted by that. So we can go back hundreds of years and look at gold, well, and silver as well, of course. In fact, just recently, it seems that one of the well-known pirates' hoard of silver was found where I think he'd had a shipwreck, and so this excites people, and people will spend hundreds and hundreds of thousands of pounds searching for lost gold and lost silver. So it represents a store of value. Currencies fail. If you look at the Zimbabwean dollar, for instance, if you'd had all your money in Zimbabwean dollars, then really you wouldn't have done very well, because they suffered from hyperinflation over the last few years, and they were only sorted out when they started to trade the international currency, which is the dollar. Currencies fail. I mean, the Deutschmark, went through a very tough time, after the First World War, hyperinflation. So people that had money saved up in Deutschmarks, their life savings wouldn't buy them a loaf of bread. So essentially, gold is a hedge against inflation. Really, now we haven't had lots of inflation in the UK in recent years, but in fact, there's even talk of deflation, things coming down in price. And when we were talking about commodities last time, you'll see how the price of many commodities has fallen in recent years. But in my opinion, that's unlikely to last forever. Stuff generally goes up in price. Everything tends to go up in price ultimately, although there can be temporary times where things get cheaper. Essentially, inflation seems to be a problem, in many countries and in many economies. So essentially, gold is a hedge against currency inflation. So you could say it's a form of dividend. I mean, you can't eat gold. It doesn't produce a dividend. That's the other thing. So if I bought a share in say Apple, the company that makes computers and Apple Watches and iPads and things, it pays a dividend, and so I will get an income for my investment. But if I buy a gold bar or a gold coin, of course, it doesn't pay a dividend, so it doesn't pay an income. So it's psychologically it's different. So that's one of the downsides, is that if I have all my money in gold, it won't pay me an income. But if I had all my money in Zimbabwean dollars in a Zimbabwean bank account, it might pay me 3%. But if the Zimbabwean dollar is worth nothing, then that 3% is worth nothing either. So essentially, gold is going to give me capital appreciation. So as the gold goes up in value, of course, I'm nominally better off. But of course, gold can go down in value, and in recent years, gold has been going down in value. But will gold go down to zero? I think not. Gold essentially is something that ultimately seems to be always desirable, by humans for some bizarre reason, because there's not much you can do with gold. It's not a very strong metal. You can't make swords out of it. You can't make fighter bombers out of it. You can't make plowshares out of it. It's just pretty. It looks nice. It's shiny. And so in some sort of jackdawish way, humans have always been attracted to it. It represents wealth in some slightly bizarre way, one might say. So how am I going to go about buying gold? Well, you've heard me talk about exchange traded funds, ETFs, in previous videos. So there are ETFs that represent the price of gold, and in the UK on the London Stock Exchange, the LSE, you can see here LSE, that's the short version of London Stock Exchange. There's an ETF produced by ETFS Securities, and it's called Gold, and its ticker, if you want to look it up, is BULL, Bull, so cool ticker, sort of as in gold bullion. There's another ETF called Physical Swiss Gold, and the contents of this ETF are held in nominated Swiss bank accounts to give the owners of the ETF a little bit more confidence that it really is there. The ticker for that ETF is SGBS. And there's an American one, the New York Stock Exchange market, the Gold Trust, massive ETF, and millions of dollars of this are traded each day. Its ticker is GLD. So I can buy ETFs that represent the price of gold. So it's a bit like buying a share. So in my trading account, I could literally buy SGBS. I would pay for the trade, and then I would be an owner of physical Swiss gold. So it's as simple as that. So I wouldn't ever have that gold in my pocket. Essentially, the value of the gold ETF I would see on my statement from the my trader, from my broker. But that's it. It wouldn't pay me a dividend. I wouldn't see money coming into my account once a quarter representing a dividend payment. But nevertheless, it's quite easy to do. Now, as you probably have gathered so far, when I invest, really I like to invest on a monthly basis, setting up regular investment programs to buy things month by month, so I don't have to think about it or attempt to time the market. Now, with gold ETFs, that's quite difficult. You've heard me talk about companies that are in the largest 350 companies in the UK, in the FTSE 350. With a broker, I can set up a very cheap way of buying shares in these companies just by making a monthly purchase. And it only costs me £1.50 to do that, but I can't do that with gold ETFs. They don't seem to be traded the same way, and so I can't do a £1.50 transaction or cost of transaction and buy gold. Buying gold I have to do as a one-off. So one way of going about it is just to make one-off purchases within a trading account, but perhaps do them less frequently. So that's one way of going about buying gold, and I guess an advantage to doing it this way is that the gold is held within the same account as the other things that I'm interested in buying, the shares in companies, the property shares, the commodity shares, and now gold shares. So if they're all in the same account, it kind of makes it easier to look at what they're all worth and to balance it out. Now, I'll talk about balancing in another video, because this is going to be critical to how the hedge fund is going to work, because what we want to do is benefit from rising prices as well as prices that have fallen, and so I'm going to need to balance the fund from time to time, and if it's all within one account, it makes it quite easy to do. It makes it easier to do. So so that's one advantage to holding gold within an ISA account, and I like generally to trade either within an ISA or within my pension fund, within my SIP. It kind of comes to the same thing in lots of ways. So one way of buying gold is to buy an ETF of gold. So that's a possibility. Now another option is literally to buy gold from the Royal Mint. So this is essentially where money is made. Money certainly used to be made. Now most money is made electronically and never exists as coins. But it used to be the case that all money was made in the Royal Mint, and the Royal Mint still exists, and they still make coins, and they still produce bullion bars. So bullion bars are gold bars, and it's possible if you go to royalmintbullion.com to set up an account and to buy gold online. And there's a range of different types of gold coins that one can buy, different types of gold bars that one can buy, different sizes and so on. Now the Royal Mint, is guarded by the UK military. It would be quite embarrassing for the British government if someone came along and raided the Royal Mint and took all the gold away. You remember the James Bond film Goldfinger. We don't want that to happen to all the gold in the Royal Mint. So the UK military guard that. So that's kind of nice if you've got your gold held there, and they will hold it on your behalf. That I imagine that there will be a storage fee, but that they will hold it on your behalf. Now, one of the good things about buying gold coins is that gold coins are currency. So literally they're sort of legal tender. Not that you go along to Waitrose and pay with a gold coin, but it's technically possible to. But I don't suppose Waitrose would take it. I think they'd be nervous about it being stolen, of course. But anyway, one of the good things about owning gold coins is that they are currency. So if I had, say, I don't know, £10,000 worth of gold coins, and they trebled in value, and I then sold them, I would make a profit of £20,000. Now, we have a capital gains allowance every year, which at the moment I think is about £11,000. So if I suddenly made a £20,000 capital gain, that would be taxable if I had made that gain outside of a pension or an ISA account. But gold coins are not subject to capital gains tax. So that's as I understand current tax laws. But I'm not a tax specialist. So if you want to investigate this and do this, then obviously you need to get some specialist advice about it. But as I understand, gold coins are not subject to capital gains tax, and of course gold coins are not paying a dividend either, so there's no income coming from these gold coins. Now at the moment, a Britannia, which is there's a picture of it here, which is a tenth of an ounce gold bullion coin, is currently £98.95. So we're in May 2015 at the moment. Who knows what it's going to be worth in the future. So I can buy coins from the Royal Mint, and I can stick them in a biscuit tin under the bed, and sit on them for years, and they'll go up and down in value. And of course it won't really make any difference to my quality of life because they're not paying a dividend, but they might make me feel that I've at least got some wealth stored away, hopefully from prying eyes. But of course someone could break into my house and steal all the gold coins, which would be obviously bad news. But is a burglar the biggest threat to my gold assets? Possibly not. Certainly back in I think it was in the 1970s, but it might have been the 1960s. It became illegal in the US to own gold as a private individual, because the US government was going broke because of the Vietnam War, and so essentially they appropriated all the gold, and it was illegal to hold gold. And one of the things that I think concerns many people in the developed world is that our governments are going to become increasingly desperate for money, because they've spent all the money years ago, and at the moment they're just living on debt, really on borrowed money. And it wouldn't surprise me entirely if at some stage a desperate government said, right, it's illegal for people to hold gold, we're going to have all your gold and we'll give you government bonds to recompense you. So I think anyone that held gold and was forced to give it up to the government would be sick as a parrot, because it would make you feel like you were living in Zimbabwe when they were having their currency crisis. But it wouldn't surprise me if that happened in the future, and that would be one of my concerns, perhaps about owning gold coins and keeping them stored by the Royal Mint, because of course there wouldn't be any choice but to give it up. So there are other options. It's possible to buy gold online through other organisations other than the Royal Mint. There are commercial organisations that will do this and will hold gold on your behalf, pretty much anywhere around the world. London, Zurich, Singapore, and these are just a few of the commercial organisations that exist that I've seen on the internet. None of them are recommendations, by the way. I'm not going to tell you what I think of any one individual company. So all I can say is that caveat emptor, which means buyer beware. If I was opening a new account with a company, I guess my concern would be, if I was paying money every month to buy gold, is it actually buying gold, or am I just funding some sort of pyramid scheme? That would be my slight concern. So I guess I would have to investigate these companies quite carefully before I made a monthly purchase. But one of the advantages with opening an account with one of these companies is that it's possible to make a monthly purchase of gold and to store it abroad, which you can see why that appeals to me. Perhaps it's a little bit less easy for the UK government to get their hands on it. And a couple of good things about investing in gold this way. One is that gold doesn't pay a dividend, so there's no income tax issue. So I'm not worried about declaring it on an income tax return. Secondly, I can hold it abroad, that's to me that's one of the advantages, because I think one of the things that many investors are nervous about really is government appropriation of assets. I mean, in the recent election, we've had parties talking about taxing mansions. So anyone with a house over worth £1 million or more, it's a mansion, and so they're saying that they might tax houses that are that valuable. So there'll be plenty of asset rich but cash poor little widows sitting in big houses that they've paid for with their hard-earned money from them and their spouse over the years, who potentially may be taxed by a government that's desperate for cash, desperate to try and bribe people to vote for them, he said cynically. So the fact that one would invest this way may be, the fact that it wouldn't be in an ISA may not be a problem, because essentially if one was buying gold like this, you're not looking at income tax issues really, unless you sold it all. And the truth is, I probably wouldn't. I'd probably just keep it there, and it would be ultimately just an asset, and something that's very different to some of the other assets that I might own. Okay, so another way of perhaps getting exposure to the change in gold price is to invest in gold mining companies. So a lot of people sort of are keen on this, and it's been said over the years that gold miners are a kind of a play on the gold price. So if the price of gold goes up, then it's suggested that the value of gold miners goes up even more. And the converse, it's suggested, is true. So if the price of gold goes down, then the value of gold mining shares will go down even more. So it's an exaggerated play on the price of gold, and so buying gold miners is quite easy through a brokerage account, a trading account, which I could have as an ISA. So I had a look at two ETFs, the ETF of gold, the American one, the big one that I mentioned earlier, GLD. So this is a huge American ETF that represents the price of gold, and you can see here this is the yellow line representing the price of gold, and the graph started in 2006 and ends now in May 2015. You can see how the price of gold went up, and in recent years it's been falling, but overall from 2006 to 2015, so good number of years there, the value of gold, if I bought gold here and still held it here, it would have appreciated 75%. Obviously not as much as if I'd sold it up here, but that's the way the cookie crumbles. Now, if I'd bought an ETF called GDX, which is again another big ETF, and it holds lots of gold mining companies within it, so it's very representative of how gold miners on average have performed, and you can see that it pretty much tracked the gold price here and then fell down massively. I think this would probably have been in 2008. Fell down through the floor, whereas the price of gold fell down much more modestly. And since then, the price of GDX, the gold miner ETF, has gone up pretty much in parallel with GLD, but never caught up with GLD. And then when the price of gold started to sort of fall and track sideways, GDX fell down quite a lot. Went up a bit and then fell down a lot more. So certainly over the past few years, buying gold mining shares has not been as good as buying gold. Now that doesn't mean that if I were to buy gold now and to buy GDX now, that over the next few years GDX would not do as well as gold. I can't say that. All I can see from this graph is that when the price of gold fell, gold miners did incredibly badly. So there we go. So is it worth buying gold miners? Maybe is the answer. It's easy to do through an ETF in a ISA account, but is it better to do that than to buy gold? Well, over these past few years, the answer is no. But over the next few years, the answer is we don't know. So there we go. You could argue that why are we having this this kind of interest in gold? Because gold's just a commodity. It's stuff. It's shiny, it's pretty, that sort of thing. And the video I did last time about commodities, made the point that commodities are just stuff. So wood, steel, iron, aluminium. Gold is the same, or is it? And I think if I went into a room and there was an aluminium bar or a gold bar, and someone said to me, well, which one do you want? I'd take the gold bar, and I think most people would. Why is that? Well, you can make stuff out of aluminium. It's light. You can, the outside of the computer I'm doing this video on is made of aluminium, and it's pretty handy. Whereas gold, is weak and so on, but it still represents money for all of us. So it's not quite a commodity. It is a commodity, of course. Gold is stuff, but not quite. And I just kind of thought this was interesting. I've done another graph here. You remember from the previous video talking about commodities, one of the what's it called, the investment trusts that I was interested in was one called City Natural Resources, City Natural Resources High Yield Trust, I think, CYN, and this black line represents their share price starting in 2008, and you can see how it went down and it went up and it went down, and I've compared that again to GLD, the big American gold ETF, and because I thought, well, if gold is the same as commodities, it'll perform the same way on a graph, so if I take the biggest gold ETF and a big investment trust that's invested in a variety of different commodities, we should see the same graph, really. And there are lots of similarities. Gold fell down in price here, not as much as City High Yield Natural Resources, and gold went up as CYN did, but there came a point after a few years where they diverged, and CYN fell through the floor, just went right down, but gold continued to go up. In fact, it went up a lot. You can see there's a big steep rise in the graph here, so there's a big divergence. Gold went up, CYN commodities went down, and commodities continued to go down. Gold went sideways and then went down, and now it looks like it's going sideways again. But you can see the consequence of this divergence, and essentially the consequence is that from 2008 to 2015, gold overall appreciated about 50%, but commodities generally depreciated about 50%. So although there's lots of similarities in the graph, there have been points of divergence, and particularly this one, which have a massive impact on the performance of the underlying commodity, where the underlying instrument, whether it's the commodity investment trust or whether it's the gold investment trust. So gold is a commodity, but it doesn't always perform like commodities. Particularly here it didn't, and so the implication is that it may not always follow the same path as commodities in the future. So that's why I like to think of gold really as a different investment category than commodities. So talking of categories, I just thought I'd draw a little graph, not a graph here, a pie chart of what I've done so far. So if you imagine this is my pot, so far I've talked about investing in shares, and I talked about ETF, international ETFs and investment trusts, global investment trusts, as a way of getting access to shares and companies that are doing well. I talked about buying property, either buying one's own home or a second property or a business property, or buying shares in exchange traded funds or investment trusts that own property. I talked last time about buying commodities through investment trusts or exchange traded funds. Today I've talked about buying gold, and you can see that there are a variety of ways that I can go about buying gold, and I'm going to do another video hopefully next week, which it'd be nice if you were able to have a look at it, where I'm going to talk about the next investment class. So stay tuned, look out for that video, and I hope you found this helpful, and catch up with you soon. Bye for now.